everything. And what better gift to the Trump family? Donald, Ivanka, and Jared, Eric, Donnie Jr., and the whole nest of them, than to wish that they live with each other constantly and permanently. No, really, no need to thank me. Each of you deserve it.
You're listening to an encore presentation of this program, KCAA, the Inland Talk Express.
Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everyone. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is our telephone number. If you pick up the phone and give us a call, we can help you with your mortgage issues, discussions. Maybe you need to figure out if you even want a mortgage. I know that at this time of year, people are worried about all kinds of things. Certainly the bill in January is not one of them. So if you're planning to buy a house early next year, you really got to watch that credit card, okay? So when you go shopping this year, you have a limit on your credit card. Try not to exceed 50% of that limit. And I'll tell you why. Really, it's 30%, but 50%, because your credit score has to do with how much money you have yet to borrow. So if you max out that credit card and you pay the first installment as an interest payment in January, it's going to ding your credit report about 50 points. So don't do it if you're planning to buy a house early next year. If you're in the first quarter of next year and you're still paying the minimum, that's a bad thing too, because what they do now is they look at how you're paying your bills off currently. Yes, I had a foreclosure 5 years ago. Yes, my bankruptcy has just been discharged 7 years ago. That's not going to matter as much as if you are paying your minimums or if you are paying down on principal. And again, if it's above 50% of what you can borrow on your card, most people have a credit card limit of what, a couple $1,000, maybe $5,000, maybe $10,000. Maybe you're one of the lucky ones who has, unlimited credit on your credit card, $20,000, $30,000. If you go over that 50% mark, you have a $2,000 credit limit, you go over $1,000, it's going to really hurt your credit. So don't do it if you're planning to buy or borrow money next year against it. Other thing, in the holiday season, we all tend to get carried away. I know. I do it too. I go to the store or I go to the mall or I'm online shopping. And online shopping is the easiest way that you can go over any limit on your credit card. Before you do any of this shopping, you have to know how much your limit is. And you have to write it in stone, you have to write it on your hand, you have to tattoo it on your forehead. Don't exceed that amount, especially if you want to borrow money early in the year or later in the year if you plan to only pay minimums for the first couple of months of the year to define or to figure out what you're going to spend on your bills. This is the worst thing you can do to yourself if you're present next year. All of next year, 2019, is going to be, I'm going to refi the house and fix the kitchen, take money out. I'm going to buy that second home. I'm going to invest in my children by buying them a condo in X and X city. Hi, everybody out there in San Bernardino and Riverside. Really appreciate you tuning in, and to our friends up in Tahoe. Hello, hello, hello. Thank you again for tuning in each and every week to talk about, I know it's a boring subject. As I told you many times on the air, people say to me, how much can you talk about someone's mortgage before you run out of things to say? Well, luckily, I've got guests, so I do run out of things to say, but I have guests come on the show, and they help us with all kinds of things about decision-making processes, how to basically work in certain areas. We today are going to have Rebecca Fitzgerald back on from Las Vegas, Nevada. Now, we do a lot of shows in Las Vegas, and we talk a lot about that particular market. I want to get a handle on what's happening at the end of the year there. So she's going to come on at 3 o'clock hour, and we're also going to have on Dr. Amy Cooper Hakim, and she wrote a best-selling book earlier in the year called Working with Difficult People. Now, in my business, just a quick side story. So yesterday I got a call from an angry real estate agent. Now, I work for Malibu Funding as well as to do this radio show. Malibu Funding is the sponsor of the show, 79620, that's their NMLS number. And they, at Malibu Funding, yes, I'm the CEO over there, the president, I guess. And what they do is provide me with the opportunity to come on the air each and every week and talk about mortgages, which I love to do. But I get a call from an angry real estate agent yesterday, and anybody who's bought a house knows exactly what I'm talking about. There are a lot of things going on in the buyer's mind and in the buyer's psychological and emotional well-being. And the last thing anybody wants to do is be in the crosshairs of someone who's cranky during a real estate deal. Well, the loan didn't fund on time, and we had some issues and had to get an extension. So by the time the phone call got to me, I don't do the loan itself. It's done by the real estate agent, one of the loan officers that work at Malibu Funding. So I get the call from the agent, and the agent is just fit to be tied. But before I could begin to explain anything about what was happening, she said, "Please hold, I've got the buyer waiting to click in." So I'm being sandbagged. Anybody knows what sandbag is? Of course you do. It's when you're blindsided by turn of events that is planned by somebody else in order to manipulate a third party, something like that, right? So the buyer gets on and the agent's on, and they just start in on me, screaming and yelling, and what's going on with this deal, and how come, and they want to take names, and they want to KA. You know what that means, right? Kick blank. So I answered them, and I tried to turn it into a positive by having everyone relax and calm down, but they didn't want to relax and calm down. But thankfully, for the place with which I live, the cell phone reception is horrible. So the cell phone got cut out, and about 15, 20 minutes later, I actually called the agent who was the loan officer on this particular deal. And her first comment to me was, "Did you hang up on him?" Because I guess they called her and they said, "You hung up on her?" And no, I didn't hang up on anybody. What happened was, and I explained the mountains and where I live, and we got to talking about how people talk to you when they feel either anger or pressured or in any situation that they get antsy or anxious. So the guest today coming onto the show, I want to ask her about dealing with people in situations in business, because when you're talking about money, and the crux of the issue with that particular deal was the deposit for the buyer was threatened. It was a $30,000 deposit. And so without getting into all the fixes and all the clevernesses that I might have in my head, that was at the crux of why they were so anxious, crazy, cranky. Anyway, the deal funded today, and nobody called me and thanked me. And it was, a typical real estate deal where everyone's screaming, and at the end, everyone's happy, or at least less than angry. And our third guest today, Celia Rios, who's been on the show a couple of times, real estate agent here in Southern California. I want to try to get a handle on what's going on in the marketplace out there. San Bernardino, Riverside, I know that you're seeing more houses on the market today than you saw 3 weeks ago. The reasons for that are plentiful, but what we've got is a very a market in flux, something that's changing, a little bit fluid. No, more than a little bit fluid, a lot fluid. There's a confluence of events happening at the end of the year, as it always happens at the end of the year. Stock market has really crashed in the last month, going down about 2,000 points. Now, for most people, that doesn't mean much because most of us are not invested heavily in the stock market. However, if you've got a pension or you've got a 401k or you're directing funds for a federal credit union, any of these large organizations that you might have some money in, yeah, they do invest in the stock market. And so watching all this secured money, or it seems secured, crash at this time of the year is not great. And we're talking huge trade wars in China. We're talking all kinds of issues across the pond in Europe with what's going on with the English Brexit. All of these things affect the overall economy. And now we're hearing the dreaded recession word pop up more and more. I would say of the top 100 economists, U.S., probably 25 to 30% of them are looking at a recession in 19 or 20. And that number could go up or down depending on, what happens with the Fed. Will we get rates that rise? Will we get a Trumponian implosion at the federal level and, the federal government shuts down. Yeah, it's all the end of the year, and it's all happening right now. So this affects the real estate market, and obviously it affects the loan and the amount of money you can borrow and the rate you're going to borrow it. And so given all of these things, the estimation of what's going to happen in 2019 is really at the forefront of what we're going to do in the next couple of weeks. So anyway, if you are listening and you're out there, thank you very much. Always write down the number and make sure you call us if you have a question after the show. I'm Jeff Barton. I'm your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry. 888-713-2929 is our telephone number. If you pick up the phone and call us, or write down the number and save it, call us later. Questions on mortgages, on what's the best deal, and how many options do I have, and this is my credit score, this is how much money I make, this is how much money I'm going to put down, or none of that. We certainly can help you answer questions as to the variety of products in the marketplace. Certainly there are many, many different choices today. The reason is that banks need loans. So they're going to open up the number of products out there in order to get loans in the door. Interest rates are rising, as we all know, although next year I don't think it's going to rise as much. But I'm not the expert on that. Celia is, and I've brought her on the show. Celia Rios is nice enough to join us once again on the show. Great realtor, loan officer, account executive for years. Celia, how are you?
I'm very good, Jeff. Thank you for having me again.
Thank you for being on the show. I do appreciate it, and I hope the intro was correct. I'm sure you're all of those things, but probably a lot more.
Everything but real estate. I've never sold real estate.
Well,
I like the other part. I like the lending part.
Yeah, the financing part is the real estate deal. I was in one just yesterday where I got blistered by a couple of real estate agents who, couldn't quite understand why the deal was taking so long, and they wanted to take names and write down my number and call the governor. It was one of those, and we've all been through that.
I have one right now that I just I asked in a very polite way, can you please just wait and just collect your check and not get involved anymore, because they're making it worse.
Oh, I know, and that's what happens. I think what happens in many respects is that the realtors are frontline. They're showing houses. They're with the customer, so they have the actual physical presence where quite normally a mortgage broker does not, or a mortgage banker. They don't.
Right. Well, I'm actually pretty involved with my customers. In fact, most of my customers will call me back and just say, oh, I'm sorry I picked that real estate agent. I said, I'll work with anyone you pick up yourself.
Oh, well, that was nice. How sweet that is. That's very nice. Okay, yeah. So the show seems to be about how to handle situations when they're tight, when they're difficult. I know it's year-end. People are a little bit nervous or about the economy coming into next year. Interest rates may slow down, and we may, see housing actually become more affordable. What's your take on what's going to happen early next year into next year?
Well, interesting enough, everyone's like, a lot of people are saying like, oh, it's going to be pretty barren because of rates and everything's happening politically wise, and also, with these, people wanting to leave the United States because it's too expensive, and just all of our trade deals that are going wayward.
Right.
And honestly, I'm just as busy as I have been. So I'm busier this year more than I was last year. Last year I took the whole month off of February because it was so slow. So I don't know if that was the aftermath of everything, but
right.
I really think we're going to hit that momentum still. I think it's going to be good. We're in a good market. I feel wise. Housing-wise, I mean, there might not be a lot. You're starting to see more out there, but
yep.
It's not a seller's market and it's not a buyer's market, and that's kind of what we need.
Right, I agree with you, and I was saying that in an earlier segment of the show. I said, look, we're getting to a point whereby negotiations are going to come back into play on real estate deals. It's not just, whatever you want, Mr. or Mrs. Seller, and I'll give it to you so I can get into this house, and you stand in line with 45 other people trying to buy the same house. It's more going to be one buyer, one seller, let's negotiate.
Correct. And I think we're getting back to that, to the personal part of it, because I remember, my first house that I bought, I actually wrote a letter because, and it was actually in the foreclosure market in 1996. So it wasn't like there was a lot of people lined up, But I wrote them a letter because there was one. I think there was two other offers behind it, and said, this is what I plan on. This is my family, and I think we're going to get back to that, where it's it seems that we've been too disconnected with just give me the DU findings and let's get this done. And it's like no, let's get to know if it's actually a fit. So I think that's a good thing. I don't think rates are going to be rising. I think they're going to be kind of settling. I mean, we've seen them kind of drop from last.
That's right. That's right.
So I think that's going to continue. That momentum will probably continue till, till spring. You might see a little bit, a quarter here and there, but nothing drastic. I definitely think we're hitting in January. We'll hit a real correction in the stock market.
Yeah, I think so. I think that's true.
Very inflated.
Yeah. When you're dealing with, not 10, 20, 30 times earnings, you're dealing with 1,000 times earning. I think that's really overvalued.
Absolutely.
Absolutely. I think that many people in our industry look to the stock market as not really an indicator of what's going to happen in the real estate market, although there are some, concurrences, i.e., if you have your money in there and you want a down payment, you can't cash out a stock. It just fell 100 points. Correct.
I would tell everyone, go conservative right now, so when it does crash, now you can buy them.
Right. Exactly. Well, it's funny you say that. I said the same thing to someone the other day. I said, hey, look, be patient. A year, 18 months, you're going to see a correction in the real estate market, so save your pennies and buy then. Don't be, don't spend it now.
I really think people in our industry, that's what we should be doing. We should be really counseling these people and just saying, I just put a young couple into a home, and I worked with them for 18 months.
Right.
So, they could have gone into something else. It would have been what they wanted. They would have been over their head. But they cleaned up all their credit. They ended up with, being able to save over $150,000 by just tightening up. They're in the movie industry and production and all that. But still,
right.
People make a lot of money. They don't really save that money. So when I kind of put them on this plan, and they're ecstatic. They got the house of their dreams, the one that they wanted. So I think...
What did you do? Did you fix their credit more, or did you get them to save a down payment? What was the key?
I got them to really start saving because they went from literally making together about $5,000 a month to making $22,000 a month. Their business blew up in doing production. They do production work and filming for racing, for all these side projects that are pretty well known, like the Baja 500 race.
Oh yeah, sure.
So they just went from, which is still good money, but to making exceptional money, but they were just spending it as fast as it comes in. And I think, that, what does it say, I can remember saying one day, God, if I could only make $1,500 a month, I'll be so wealthy. The average salary was $800 a month.
Right.
And then once you get that, your spending changes. So I think, and they're millenniums, so there's this disillusionment that money always comes and it's never going to end. So, and I don't really think they've been taught anything about savings. I don't think the average person understands how to save. So.
Now, are you receiving any requests for refinances? Speaking of money in your house sitting there, are you recommending people to maybe take that money out and put it in cash right now, or what's your idea on all that?
I actually have several refinances because even though we came out of that depression, or we call it a recession, people, everyone says, oh, that was so long ago. It wasn't. It took us 5 years, 6, 7 years to even recoup or even have a breather. And a lot of people have charged. And so, even some people that have refinanced, it's kind of funny. I have 3 loans going right now where they had a 3.625 and one has 3.5 30-year fixed. And I put them in. One's going into a 5 1/8, and the other one's going into 4 3/4. But they're like, at first they're like, no. And I'm like, well, how's that rate making you feel good when you can't even make your monthly payment?
Right.
And I just gave them the scenarios. And actually, one of them I ended up changing into a 3.5. And I put him in a 7-1, and I showed him his history of how he's constantly refinancing every 3 years.
Right.
You're going to refinance within the next 7 years. Don't worry about the 30-year fix. This idea about a 30-year fix, and I have to have that. It just makes no sense.
Well, there's such a movement right now, and they keep bringing it up to try to do away with the 30-year, right? Because the banks are hurting and they need churn in the mortgage market. So if they had like a 15 as the limit, that means you'd get twice the business in 30 years because those people would have to. But as you just said, most people refi every 3 to 5 years anyway.
Correct. I do have a place that does offer 30 due in 15.
Wow. I like that very much. Hey, shout out your phone number for those who are looking for a terrific loan officer.
949-903-2881.
Celia, thank you very much for coming on the show and talking to us about the market conditions and, a little bit about what's going to happen next year. Thanks a lot.
Thank you, Jeff. I really appreciate it.
And I appreciate you coming on the show. This is Celia Rios, great loan officer. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry, 888-713-2929. That's our telephone number. If you pick up the phone and give us a call, we can answer your questions about your daily mortgage. Yeah, what is your daily mortgage? Well, every day you are in your house and you're enjoying the morning and drinking a cup of coffee, you have a little bit of lunch, dinner. Another day rolls around. Well, you are paying each and every day on your mortgage. I know you have 12 monthly mortgage payments, but really if you break it down, you could break it down daily. And in those daily payments, depending on the type of mortgage you have, but everybody's got it, you've got your mortgage payment, which is your principal, your interest, and that goes to whoever owns your loan and the servicer, your taxes, and that goes to the government, and your insurance, and that, of course, goes to the insurance company. Now, all of these payments, your principal, interest, taxes, and insurance, PITI, can be broken down into a daily, right? So you know what your daily expense is, your house expense. Now, if you're out there and you're thinking, okay, I want to take money out of my house, I want to, fix up the kitchen, I've got college to pay for, I want to buy another income property. These are the numbers that you have to look at. Your principal, interest, taxes, and insurance is a house number, the LTV, loan to value, okay? So if you're looking at that number and you see, okay, I have a house that's worth this, I have my principal, interest, taxes, and insurance to pay, you can then kind of figure out what you're going to need to do in terms of those numbers in order to take money out of your house, because it's an equation, it's simple, and it's something that you can kind of do at your house. So your daily rate is very, very important so that you understand, look, if I'm taking home $100 a day and my daily expense is $125, guess what? I'm upside down, and this isn't going to work. So the debt-to-income ratio on a monthly basis is usually around 43%. Let's just say it's 43%, and on FHA, it can go up to 50%. But we like to keep it lower just because lower is better. So if you're thinking about doing a refinance and your daily is above that, well, obviously your monthly is going to be above that, and this isn't going to work. I know you have equity in your house. I know you want to take it out. I know you want to use your equity for some good purposes, or you just want to take it out because, hey, money in the bank is better than money in your property, especially if we're looking at an economy which might go into recession in the next 12 to 18 months. I'm not the only one saying it. Go to Mortgage News Daily. Go to any financial site, MSNBC. Go to Fox News. Go to Bloomberg. Any of these financial sites will tell you that we are in a look at possibly recessionary issues. We had the inverse curve, which meant that the 3-year Treasury note was paying more than the 10-year Treasury note, when usually it's the other way around. That's called an inverse curve. And when we go into that, we're looking at the possibility of a recession coming up. Yeah, that's an issue. We're looking at long-term effects of this trade war with China. We're looking at the government threatening shutdowns. We're looking at the Democrats taking over Congress. There's a lot of things going on that make people nervous. Now, if you're out there and you're thinking, oh boy, here we go again, I don't think it's going to be anything like it was in 2008. We don't have those major issues. What we have is a typical capitalistic up and down in both the equity market, in the stock market, and certainly in the real estate market. That's what happens. Now, out here in California, locally, we're talking San Bernardino, Riverside. I have a bunch of friends in Rancho, and I even have in LA County out in Covina, and a number of other offices that we work with. They are looking at locally the expansion of inventory, as we talked about in the last segment, or we will talk about in the next segment. Both of these items and all three of these items mean that we've got a changing marketplace, expansion in inventory, property values not rising as much. So if you're thinking of all of these things and making sure that, okay, if I've got money in my house and I want to lock in that money, i.e. cash in the bank, then I want to do a refi. So this calculation of your principal, interest, taxes, and insurance on your daily rate, divide by 30 or 31 when you figure it out monthly, you can figure out pretty simply. Now, I know a lot of you are, paycheck by paycheck people, i.e. you get a paycheck, you spend your paycheck, you take a certain percentage of that and you put it away for education or other needs, long-term health care. And by the way, hey, Daryl, the health care costs, what is happening with our health care costs in your house? I mean, what's going on with you guys?
Well, it's certainly going up because, first of all, employers are paying less and less and less of a percentage than they used to, if at all. Mm-hmm. And, even Medicare doesn't cover 100%. Right. And you need to get supplemental insurance beyond that. And then if you don't get health care, you get banged on your taxes.
Now, why has this been a problem since, I don't know, before Reagan? Nixon talked about health care. We've been fighting this health care issue for 50 years.
I mean, really, single-payer health
is the only
thing,
thing to do. Yeah. You need basically Medicare for everybody, right? I mean, that's what we're talking about.
Absolutely. And first of all, for people on disability, they have no decision-making process. It automatically comes out of their Social Security, automatically.
Right. You don't have choice when it comes to your bill going up. You do have choice as to how much, i.e. my deduct. Now, here's the thing. I have a deductible that's high, right? $6,000 is my deductible.
Per year.
Per year.
So you have to go partake, if you will, of $6,000 worth of medical services before you get any coverage or payment from an insurance company.
That's correct. Now, I'm of an age where I have stuff, right? Yeah. I mean, you know what? There's a lot of people.
You and me both, pal.
There's a lot of people that have stuff. Yeah. And I'm in healthy, good shape. I'm not in bad shape kind of guy. But if I've got to pay $6,000, right? $6,000. Now that may seem like nothing to some people, but that's a lot of dough.
To a lot of people, that's a month's salary or
exactly right.
More. Yeah.
Exactly right. So I got to come up with $6,000 before they entertain. Now I called a doctor who, hopefully this last bill will exceed my limit and I'll get a little bit back, right? I mean, every little bit helps. $1,500, $1,000, whatever it is.
Of course.
So the billing service that the doctor uses, they're not associated with the doctor. So if I'm disputing the bill or when they're sending it into the insurance company, the doctor sends me to some third party.
Which they have no knowledge of what happened.
So I call 5 calls, an email. Finally, I had to call the doctor back and I say, hey, are these people real or are you just pulling my leg? So an hour later, I get a call from the billing. How can we help you? I said, how can you help me? You mean you don't even know why you're calling me? You have to really take a deep breath and say, okay, let's start from the beginning. Explain to her the situation. She said, oh, yeah, that bill should have come to you already with an explanation. How many times have you heard that?
The thing that I'm baffled about is prescription drugs, right? I don't have any coverage for prescription drugs at the moment, and there's a variety of things that I do need on a monthly basis. Right. And the price variations are huge. Huge. I mean, I had one particular prescription that Kaiser originally had the prescription. They wanted $3,000, the insurance copay on it.
A year?
Then I went to CVS and it was, just for 1 month.
Oh my gosh.
Went to CVS, it was $1,600. Went to Walmart and it was $600. But here I found a coupon, $40. Same prescription, same period of time, $3,000 in one place, $40 somewhere else.
This is
if I hadn't asked or pushed, Some people just pay the $3,000.
Exactly. It's like when something appears, and the reason we're talking about healthcare, and the reason I brought it up is because every extra dollar you spend in this, you can't spend on your house. The house that you want to get, the mortgage you're trying to get into the market before the interest rates go up to 7-8%. That's important. So all of this has to do with you getting the best mortgage, the best financing, and the best house available in the market. Because let's face it, next year is going to be an opportunity for housing. People are nervous about the economy. There's going to be more properties on the market, and the interest rates still, and by the way, interest rates this week, 4.75%, have come down a quarter point in 2 weeks. Why is that? Because of all these things I've been talking about the economy. People are a little bit nervous, so what happens is the bond market kicks in, and we get a retrenchment of prices in the mortgage market. Anyway, I'm Jeff Barton. Thanks, Daryl. And I'm your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry, 888-713-2929. That's our telephone number. If you pick up the phone and you give us a call, we can help you with your mortgage questions. I know it sounds mundane and boring, but you know what? January is right around the corner. You're going to want to recover quickly from your debt here in December if you're buying for the holidays, which most of us are, and you want to be able to maximize the amount that you can go out there in the marketplace, get a great mortgage, and buy that house. Inventory's rising, as I said. I think we're going to see that trend continue, and I think that mortgage interest rate rise might not be as many as we thought, and they might not come as quickly as we thought. So given that what it is, everybody out there, thank you for listening to the show, coming to it each and every day. We try to bring guests to the show that can enhance our ability to both talk to you and have you talk to us, professionals in the industry, and then maybe get a little fun out of it. I have run across Dr. Amy's information on a website and a Facebook page that I just joined about radio hosts, radio broadcasters, and I really appreciate what she brings to it. She's a author. Her latest book, Working with Difficult People, shot to #1 in Amazon sales for business etiquette books. I actually saw it in the airport. I'm sorry, Amy, I didn't pick it up. I apologize for that. But I saw the headline and I was like, oh, that's something I really need to read. Anyway, thank you very much, Dr. Amy, for coming on the show.
My pleasure. Happy to be here.
And thank you very much. Okay, so I'm in my day job is I work for a company called Malibu Funding, and we're in the mortgage and real estate world. And we constantly are quarterbacking between buyers, sellers, agents, and everybody else in between in the business. We're constantly having to negotiate with people that are difficult to talk to. I got yelled at yesterday for 25 minutes by an agent who just wanted to berate me. It was very difficult to hold my tongue. Give me some tips, first off, before we get into some other things, of how to handle a situation in a workplace that you have to encounter, and I encounter it all the time.
First of all, it's definitely unfortunate when you're in that circumstance. But the best thing to do, if possible, is to take emotion out of the situation.
Right.
So try not to take that personally. Recognize that the individual who is yelling or screaming or ranting most likely is not mad at you. Perhaps he or she is upset at the situation or something completely outside of what you and he or she are talking about. And so that's the key. The key is to remove the emotion. So try to make it more pragmatic, more practical. What do I need to do in order to get what I need and want from this person and he or she from me?
Okay, in that strategy, do you try to figure out what's going on with the other person, or do you just swallow and take a deep breath and try to get to whatever the solution is?
Well, it depends on the way that you relate to this individual. Is this a one-time thing? Are you dealing with a customer who you no longer have to deal with after you end this transaction? Or is this someone who you'll be interacting with for days, weeks, months, years ahead? So I think that can help you to determine whether you want to invest the time and energy to repair or fix that type of a relationship. If it's something that really won't affect you in, say, 5 minutes, then take a deep breath and deal with it.
Right.
Perhaps the next time you encounter someone like that, if there's someone else you can, pass that person to, that might be an option if you have a supervisor who can handle that type of an interaction for you.
Yeah.
That's why they get paid the big bucks. But otherwise, the idea is to really try to take yourself out of the personal component and really just focus specifically on the tasks or the things you need to say or do in order to move beyond and wipe your hands clean of that particular individual.
We're all, it's a holiday season, so everyone gets a little on edge during this time of the year. I have recently gotten into a situation with insurance companies. I went through the latest fire out in Malibu, California, and dealing with insurance companies and people who are very nice on the phone but ineffectual, and then, as you said, just pass you off to the next person. So in talking on the last segment, we talked about healthcare, and we talked about the difficulties with dealing with these people. You're a consumer, I'm a consumer. How do you, from that standpoint, deal with situations that you seem to have no control over?
Well, we need to recognize that there may be certain situations, seriously, we do not have control over.
Right.
So we may need to then speak to the person who can help us best. We need to also remember to take accountability for things that we do have control over and things perhaps that we might need to do better or fix the next time. But if it's something that we need just an answer, we need to figure out who to go to get what we want and need. The main issue in any relationship, whether it be personal, professional, oftentimes stems around conflict related to communication. So we need to open the lines of communication, make sure that we're clearly asking for what we need from the right person who can actually give us what we need.
Tell us about your book a little. Tell us about the how you break it down, the 10 different things you might be able to say to somebody to, calm a situation. Tell us a little bit about your book.
Sure. So my book is actually a revision and modernization of a book that my grandmother wrote over 25 years ago.
Wow.
She was a mentor of mine, and while she wasn't an industrial organizational psychologist, she actually encouraged me to go into the field. She was a management consultant and wrote a number of books, one of which was Working with Difficult People. And when I found out that it was still in print, yet rather outdated, it didn't have any mention of email or what do you do when your boss is looking at his smartphone instead of you when you're talking, that kind of thing. I approached the book publisher and asked if I could revise and modernize it. So it's a very special project and a book that I'm thrilled is doing well in sales. It's ebook and audio as well as paper. But there are three different main types of individuals that we deal with. So first off, it's bosses, and then colleagues and subordinates. And the reason that the book is broken up into those three main sections is because let's take a narcissistic individual. If you have a narcissistic boss, you would need to react differently to that individual than you might a narcissistic colleague or a narcissistic subordinate. So while there might be certain tendencies, the way they play out based on their role in relationship to you greatly impacts how you're going to deal with those individuals. So the book is laid out nicely you can pull somebody up from the index or use the table of contents, depending on your relationship to that person, and find out not only what that means, say a narcissistic boss, but also what you might say to get what you want and need from an individual like that, and specific talking points and tactical strategies so that you can take and move forward with that relationship, applying much of what we spoke of at the start of this, taking emotion out, being practical and pragmatic in your approach.
And how much self-awareness? I mean, do you have to spend some time in a therapeutic situation to know who you are before you approach any situation like this?
You know, one of the funniest things that I found, because I'm also, a consultant, and I go into the workplace and help people to tackle a lot of these issues, but something that I found to be quite enjoyable and exciting is when someone is calling me and asking if I can help them because they know that they are one of those difficult people in the book. So I think we all have difficult type tendencies, at different times of our day or life or with certain people and relationships. But yes, if you know that you happen to fall somewhere, you might use some emotional intelligence and some self-awareness techniques so that you can actually say, you know what, hey, here's who I am, and I know this might be something that's challenging for my colleague, for my boss, for my subordinate. Therefore, I'm going to lay it all out and see what I might do in order to better react or relate to that person.
Do you think society, either in movies or fiction, I guess, heroizes the individual who's that tough-minded, difficult person that everybody seems to admire and gets the job done. Do you think that adds to some of this, or do you think it's mostly, how you're raised in terms of how you interact with people, especially with bosses or with subordinates?
I think in today's world, we really live in this age of entitlement.
Mm-hmm.
And I think because of that, people expect certain types of responses from individuals, regardless of, tenure or experience.
Right.
They may feel that they are entitled to. We have a lot of issues with generational differences in the workplace now.
Yep.
And the way that we are brought up, not only in our current family life or our current circumstances, but also, various cultural and other influences can truly impact the way that we interact. And we have a lot of cross-cultural type communities and organizations now.
Right.
So all of those issues really weigh into even perhaps offending someone unintentionally. I see that a lot in the workplace, that we don't mean to come off as
right.
arrogant or stuck up or, mean or domineering or too docile.
Right.
And instead, we're coming off in the wrong way because we're not understanding the way that our messages are being perceived by others. So there really is a huge self-awareness component. We need to see who we are and make sure that our values are matching those with whom we're interacting. And if they don't, and we're still interested in interacting with them, we need to see where we can match up and come to some type of a compromise so we can move forward.
Dr. Amy, thank you very much. You know what? That's terrific information. I want to have you back on if you'll let us
Sure,
entertain you again. Yes, thank you very much. But I appreciate you coming on the show. We're out of time.
No problem.
Thank you very
for
much.
having me.
And thank you very much. This is Dr. Amy Cooper Hakim, and her latest book, Working with Difficult People, you can get on Amazon. I'm Jeff Barton. I'm your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry, 888-713-2929. That's our telephone number. If you pick up the phone and give us a call, we can talk to you about your mortgage. We can talk to you about some of your financial questions that you're going to have facing you if you're looking to purchase. I was talking a little bit in a previous segment about the purchase market, what's happening in inventory. If you are in the market right now for a house, you may have noticed that more houses are on the market today than necessarily, at least on a percentage basis, than were 2 or 3 months ago. Year end, we usually get market actually with less houses, just because people pull their houses off their market at the end of the year and they want to start the new year with a fresh listing. And the days on market number in the multiple listing service is always a big number. If you see and you're searching for a house and the house has been on the market 100, 200 days, obviously you're thinking that the seller would be more prepared to take a lesser offer, right? So if we get to the end of the year and there's a question or an issue about that, usually sellers take their property off the market. I mean, that's just what you do in the business in order to, as I said, have a fresh listing by the first of the year. But this year is a little bit different in that all year we've been complaining about inventory. There's a lack of inventory. That's what's driving the price up. Well, there is more inventory. The prices are not rising as much as they were. As a matter of fact, we're probably going to see next year 3, maybe 2 to 4% rise. We're not going to see the 6.5% rise we saw this year. And in certain parts of the country, we're even looking at a pullback of high prices to where it's flat, i.e. there is no raise in value. Now, what does this do to your psyche? Does this make you, skittish about the market? Are you worried that perhaps you're overpaying for a property right now if you go into the market and pay full price? Well, this is the best time for buyers. You need to educate yourself as to the precise house that you want, obviously, and also the market conditions. Your realtor is obviously the one to help you do that. There are a number of different sources where you can also glean the information that you need. But certainly when you're looking to find a house and you figure out what your price, negotiate. And if you can't negotiate off the price, negotiate. If it's an FHA loan, try to get some points back in terms of closing costs. 1, 2, 3 points, why not? Used to happen all the time. In a down market, 3% closing costs is really normal. So if you're thinking of it and you want to buy a house and you're looking at the inventory and you're seeing what's happening out there in the broader-based economy, yeah, it's a good time for you to empower your agent to go to work for you, i.e., let's dig your heels in a little bit. There may not be multiple offers on properties like there were, I don't know, something like that, about 6 months ago. So empower your agent to go to work for you. Do the research on the property you're really considering and make sure that you if you're looking at an FHA loan, ask for some concessions. Ask for some seller concessions on 1, 2, 3% towards closing costs of the loan. All of these things are back in play. It's more of a normal market where you have an equal number of sellers, an equal number of buyers. And usually what they say is it's about 5 to 6 months worth of inventory. Now, certain parts of San Bernardino Riverside, and certainly up in Tahoe, that may not be the case. There are always neighborhoods that are very hot and very, in demand. But for the most part, on average, this is what we're seeing, and this is what we're going to see next year. We are looking at an economy which is looking good in terms of employment, although what we did see is that the unemployment numbers actually spiked last month. We have more people applying for unemployment than had been for quite some time. Now, everybody is aware of the GE closing a couple of plants, laying off, I think it was 13,000 workers. Does this forebode for the future? In manufacturing, I would say, yeah, probably. I mean, manufacturing was always the thing that won an election for the current president, but was never coming back the way it was back in the 60s or the 50s or the 70s. The reason for that is manufacturing is normally done with cheap labor. Cheap labor does not exist in the United States anymore just because of the protection of workers. And these are good things, by the way. I wish the whole world was like that. I wish a car cost more. Why? And I know this is anathema to the listening audience, because it means that workers get paid. It means that the health care, that the systems in place to make sure that a livable wage for employers in the manufacturing sector is enhanced, not curtailed or cut or held in abeyance. All of these things are very important to people who are out there in the workforce. So the trade war with China, what's going on there, and how this affects what you pay for things online or at Walmart, yeah, that's at the heart of all this. So when you're buying cheap and when you're looking at products that necessarily you could buy, and I'm not a 100% buy American guy just because I don't think that product exists. There is no all-American product. I mean, there may be labels that say that, but there really isn't. So when you're thinking about buying in certain, areas of the economy, try to buy in areas that would support a worker in your area. So if you go to the local grocery store, a Marqueta, or you go to, the local Ralph's or Vaughn's, which are national stores, try to pick a market out. Try to go to a farmer's market on the weekend where you're buying direct from the farmer. Just other local things, the plumber, the electrician, people that come out and do work around your house if you do that. Or if you're going to buy a rake, go to a local hardware store, not the big multinational chain. Why? Because the dollars you're spending stay in the community to somebody who's actually going to spend the money in the community. May cost you a few bucks more, but it really helps out the local economy. I'm a little worried about the economy, to be honest with you. I'm not a naysayer, but I do believe that we've had a run here since 2010, which has been unlike any other run, both at the stock market level and in the jobs creation area. We've created so many new jobs that we have now about 165 million people working in the United States, and that's the biggest number that has ever worked in this country. Now, that's a big number, 165 million. Now, a lot of these jobs are jobs that are at the $30,000 and below level. I understand that, but we need to figure out a way by which we can take your son, your daughter, maybe somebody who's in their mid-50s who just got laid off, and figure out a way to get them to a job that pays a certain amount of money. In To my mind, it's not forcing entry-level jobs into paying more. It's figuring out how to transition workers from one end of the spectrum to the other. Look, a McDonald's job is not a lifelong job. It's just not. You need to get that as your starter job and then move on either into management or hotel or food management or into some other aspect of a career where you can look to the future and say, yeah, I can make money at this. Anyway, all of this stuff is important to what we're doing in the economy because let's face it, without making money, you can't get a loan. You can't buy a house. Right now we're going to see, and next year even more so, we're going to see a flattening of prices. Therefore, the real estate prices in your area are not going to go up by 10%, 5%. They may hold inflation rate at 2.5% to 4%. So that means that things will become more affordable. And if you take care and not spend too much money around the holidays, which I think in an earlier segment I talked about, and you can manage the expectation of what you're looking for in the area that you want to see, you can begin to see your way towards affordability. And that's one of the issues. Look, there's two things, right? There's the number of houses being built, and there's the affordability rate of people who need to buy. Both of those numbers need to go up. We need more houses. And by the way, the Home Builders Association came out with their last monthly report. It said that they expect to build less houses next year. So if they build 650,000 houses nationwide this year, they're not going to build that many next year. And everybody knows that we need about 1 million new houses built every year to catch up with the demand. So, right away we're seeing that that's probably not an answer, but it is an issue by which we need to address not only locally here in the San Bernardino Riverside and up in the Tahoe area, but certainly all over the country. Housing is what we're needing, and then we need to make sure that people are raising their income by getting out of jobs that really, they're overqualified for, and getting into work that we can say, okay, this is a job that which it can be sustainable in an economy that is not a manufacturing economy anymore. It is a financial services economy, yes. It's a healthcare economy, yes. These are the type of things that we need to push people into jobs in order to afford housing that hopefully will get better numbers on the Home Builders Index next month. Anyway, I'm Jeff Barton. I'm your host for the Mortgage Voice, and I really appreciate you listening this week, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.